Hello and welcome to a special edition of Indian. Donald Trump has stormed back to power, and one of his key promises is to cut down income. Now, Trump's victory has sent Asian currencies from renminbi to yen to baht hurtling down by 1.5% to 2.2%. So what's in store for Asia and for the Indian economy? I will be speaking to a host of economists on Indianomics in the days to come. First up today is Jahangir Aziz of JPMorgan. Jahangir, thank you very much for staying up for us. I know it must have been 2 bad nights for you. Well, the big theme of Trump's campaign was that he will bring income tax to zero, fund the budget with tariffs. To what extent will he actually cut taxes and replace it with tariffs?
It's very hard to say how much of his campaign promises he will keep, but let us not forget that President Trump is someone who has broadly kept to his promises. So I think there are 4 separate areas where I think policies will be very different that affects the economy. I think one is obviously tariffs, the other is immigration, the 4th is fiscal policy, and the last is regulation. There's also a question about agency appointments, but that I think is somewhat less related to economics per se. It could be when the Fed comes up for, the 3 members of the Fed who are up for reappointment in 2026. We shall see how that plays out. But I think right now, I think it's broadly these 4 areas. So answer to your question, to what extent, I think there is a sense and a belief, not only by President Trump, because he's spoken about it a number of times, but in our own conversations, in things that the people around President Trump have been saying, there is clearly a belief that these are swappable things.
So, Jan 20th, he takes office. Will he raise tariffs immediately?
So I think of all the things that we spoke about, right, I think fiscal and regulations clearly will take time, right? And the specifics are not known. But I think the 2 places where we think not only we have some sense of urgency by the Trump administration, but also it is doable, those are tariffs and immigration, because neither of them really require any legislative approval. The legislative approval is already there, so they can be done with executive orders. So of the 2 of them, I would say tariffs is where I think there is least complication. Immigration restrictions are also less complicated, but mass deportation obviously is going to take some planning and some time to implement. But I think restrictions in immigration and tariffs definitely are things that we are eyeing as things that can be done very quickly under the new administration.
So are you already bringing down your growth forecasts of either the global economy or at least for Asian economies?
So it's complicated in the following sense, right? So let's say, there is a set of tariffs being imposed. Most likely it is going to be targeted on China because that's what President Trump has spoken about. But I wouldn't be surprised if other countries like Malaysia or people in or Vietnam or things in ASEAN, where there is some degree of Chinese transshipment that takes place, is also falls in the target. And I wouldn't also be surprised if other countries globally, sector-wise, are also targeted. Right? That's what was the playbook in 2018. I think that is something that will clearly affect through China, not just China, but EM Asia. There is, however, there are 2 other things that emerging market countries is already being shocked with, which is that even while we think that we as economists think that there is we need for specificity, we need to see what the exact policies are, et cetera, et cetera, et cetera. The market isn't waiting for us, right? The market is already pricing in the direction of fiscal policy, the direction of deregulation, and the direction of tariffs. And you can see that already in what's happened, let's say, to the 10-year, what's happened to the yield curve, the steepness of the yield curve, and obviously, and of course, what's happened to equity markets. and to the US dollar. US dollar strength and US Treasury strength will also be part of this calculus. So it's not just going to be tariffs that's going to affect emerging markets. It will be US dollar strength. It will be the rise in US Treasuries and tightness in global financial conditions. Both of them, emerging markets will have to contend with, particularly in Asia.
So what should Indian businesses be prepared for? Lower global growth? Or, in fact, are you also putting any downside risks to your India growth estimates?
So I think as far as India is concerned, it is not going to be in the line of direct tariffs, right? It is going to be indirect impact, and the indirect impact comes in two ways. One indirect impact is going to be that, dollar CNY, most likely, as was the case in 2018-19, will depreciate in response to whatever tariffs is imposed. Last time, 70% of the tariff increase. So tariffs in China were raised from 3% effective rate to 21% effective rate, and dollar CNY depreciated about 13%. So 70% of the 20% of the 17 percentage point increase, about 70% of that was in dollar CNY. So if that's the playbook, right, then it's a significant depreciation of dollar CNY that is probably in the making. PBOC will clearly not allow that amount of depreciation, fearing financial instability. So let's say we even go halfway through. Even halfway through is a significant won depreciation, which means that the INR will appreciate by exactly that much against CNY. And I think that the net trade impact of that is going to be significant. So that's the first part of it. The second part of it is that China will try to find other markets to where it will sell its products. That's what happened in 2018-19. And the places where China sold its products using its depreciated currency was emerging Asia. India was included in that, Latin America, Russia, etc. So I think that the two separate effects, right? One is, what do you do in the face of a 8%, let's say, I'm just making up numbers, we don't know what the exact numbers will be, of an appreciation of INR against CNY. We were already complaining about the net trade deficit with China. Imagine what will happen if you have a 10% appreciation of INR against CNY. So clearly, dollar INR will have to react to it. And then there's a second part of it, which is that to what extent China uses that to enter into Indian markets. And I think the combination of these two things is what India will have to contend as the first shock coming from the trade tariffs.
Oh, yes. I mean, all banks and brokerages are already rewriting their rupee trajectory to depreciation. But okay, let me come to the Fed. I'm not worried about the current Fed meeting. What about the Fed's terminal rate? Will it be higher than you thought originally?
So I think that, the Fed will face the same kinds of uncertainties that we are facing in terms of we don't know what the policy specifics are, right?
Okay.
And we not only we don't know what the policy specifics will be, we do not know how the economy is going to react to it, right? So our sense is that after this week's rate cut, which is probably baked, in the price, etc., I think the Fed slows down because that's the right sort of response in the face of increased uncertainty about what's going to happen to employment, what's going to happen to inflation. So instead of a cut every meeting, we are thinking now of cuts every quarter. And we have basically looked at raised our terminal, our endpoint. We used to have it at 3, we are now looking at 350, right? So there isn't a very huge change either in the terminal rate. It's sort of moved up by about 50 basis points close to where market is. But there is a slowdown in the pace of the Fed cutting cycle. But my point is, Latha, is that is not how, let's say, Reserve Bank of India is going to react. I don't think Reserve Bank of India waits for what Fed does. It is going to react to market condition, to the dollar, to what is happening to US Treasuries now. And that's, I think, how all central banks are going to react.
Yeah.
Okay, so just a final question. Does the space for rate cuts go down in India as well?
I think the space for rate cuts broadly in emerging Asia goes down definitely in the fourth quarter of this year. So all the rate cuts that we have in the fourth quarter of this year in several countries, I think they're pulled back. I think the only countries in which we would still imagine or think about rate cuts in 2025, at least in the first half, are probably Korea and to some extent India. And that is based on the fact that, the growth impact, not just from the tariffs per se, but simply the growth slowdown that we are watching in high frequency data will probably get more entrenched as days go by. And given the fact that inflation seems to be coming back to normal levels, et cetera, et cetera, and the case for rate cuts in India had already been done some time back on a fundamental basis and held back only because of financial stability reasons. I think that probably will happen somewhere in the first half of 2025. But broadly, yes, the space for rate cuts becomes much less. Central banks all over emerging market world is going to face that. And, I think that much will depend upon what is the impact on growth. And just one last point on this, Latha, that if we go back to 2018-19, we focus on trade because it was tariff related, right? But that wasn't where the negative impact was. So if you look at what happened in 2018-19, so in July of 2018, that was when the first set of tariffs were imposed, right?
Yeah.
And if you look at where was the biggest reaction was on global business sentiment, including in India. Look at what happened to PMIs there. And then look at what happened to capital spending globally and in India. Both plummeted. And it wasn't till about the third quarter of 2019 that we saw some stabilization. And then, of course, we got hit by the pandemic, so we don't know where it went. So I think the biggest unknown is how business sentiment is affected and how capital spending reacts to it.
Okay, point taken. Thank you very much. Out of time. Thank you very much for joining us, Jahangir. The key message, US exceptionalism may continue, but global business confidence to invest can take a hit because of likely cantankerous policies. Wrap up on this edition of Indianomics on that note. Chartbusters coming up.